Dear investor, if you've always been curious how you could benefit from the fluctuations in gold prices, you should not look any further and watch this video until the end, because I'm going to tell you everything about it. The gold price is at this moment trading at its highest level ever. We're trading around $2,523 for a troy ounce. It hasn't been that high since I'm working in the financial industry, which is almost 16 to 17 years. So you can imagine. Gold has gone up since January 2024 with almost 26%. Now, how can you benefit from that? How can you trade in gold? Obviously, you can go to one of these gold brokers and then buy some gold, fill in all sorts of complicated forms, and it's stored somewhere for you. You can go and have a look at it, or you can buy it somewhere and keep it for yourself. But it might not be such a happy feeling as well, because it might get stolen or whatever. The most easy way for you to benefit from a price increase in the gold price is by buying a FX spot position. So that basically means, you can see it in the screen right now, XAU USD. That is the spot on the dollar of the gold price. So if you buy one of these and gold goes from 2,500 to 2,600, you basically make 2,500, 2,600, you earn $100. Very simple, easy way to benefit from an increase in the gold price. You do pay some interest on this product, so bear in mind that it's a leverage product, so there's also some risk in there. You invest a smaller amount of money and you have quite a big exposure in the market. What a lot of our clients are also doing is buying an ETF. For instance, the Amundi Physical Gold ETC. I'm saying here ETF, but it's actually an ETC, standing for Exchange Traded Commodity. This ETF or this ETC, you're buying in euros. Different quotations. You can buy it on the German stock exchange. You can buy it on the Italian stock exchange. At this moment, the price of this ETC is 90 euros. So if you spend 90 euros, you have exposure to the gold price. At the beginning of this year, this ETC was trading at around 75. So a slightly lower performance for the simple reason that you're buying this in euro. So the dollar has become slightly weaker compared to gold. What is the nice thing about this ETC is that the gold is stored for you in a vault at HSBC in London. So HSBC is physically replicating the value of this ETC by keeping the gold in your name in a vault. If you have a preference for BlackRock, you could also buy the iShares Physical Gold ETC. This ETF works sort of like the same as the one I mentioned before from Amundi. However, BlackRock is using JP Morgan. Same physical replication method. They're keeping the gold in a vault somewhere in a safe in London at JP Morgan. Many times you see that gold is mentioned as being a safe haven or an investment against inflation, or when stock markets are crashing. Well, one thing we know this year, the stock market hasn't been crashing. The markets are up almost again around 15%, and gold is up even at 25%. But it hasn't been a smooth ride. If you look at the price fluctuations of gold over the past 4 months, so basically from March 2024 until today, end of March, until today, we're at the end of August 2024, you can see that the price has been fluctuating -5, +8, -5, +8. I've signaled it with some arrows. And those moments are really nice entry points. You can really see references also if you compare it to an RSI. If you use an RSI, Relative Strength Index, you can see that based on the Relative Strength Index, when it hits the 70, so when it's overbought, many times you see a correction in the gold price. What could you do at that moment? You could, for instance, sell a short spot forex position, FX XAU USD short. So you sell it. If the price then goes from 2,500 to, for instance, 2,000, you sell one, you make 2,000 minus 2,500. Basically, you earn $500 at that moment. On the other hand, we also see, for instance, in beginning of June, that the price went from 2,200 to 2,400 at that moment. So you have an increase in price of about 7%. If you take a position at that moment, you have in really short notice, a really short period of time, you can have a really nice return just by trading on the fluctuations of the gold price, using a chart for that, using a simple indicator, which could be an RSI or could be a moving average. Please, if you want to know more about this, reach out to me or to Taco or my colleague Casper, and we will help you. We will explain you anything you need to know, everything you need to know about trading on charts. If you like to invest in companies, so you like to buy shares, you could also have a look at, for instance, I'm going to mention 3 of the larger players. So keep watching. Don't switch off the video just as yet. The first player is the second largest gold mining company in the world. It's called Barrick Gold. You can buy the stock for $26.89. Has a target price in the market of $31.45. And at the beginning of the year, the stock was trading around 24. So it hasn't had such of a big run as the next 2 companies that I will highlight to you. Barrick Gold is the second largest gold mining company in the world. The next one I want to highlight is Coeur Mining, C-O-E-U-R Mining Incorporated. Also a very specific mining company, mainly focused on the southern part of America, so Latin America. Company has a valuation of $2.3 billion in the stock market. Target price $7.14. At this moment, you can buy the stock at $6.08. The beginning of this year, this stock was trading around $3, so it almost doubled in price. Still, the market thinks it has some potential left. People say, or the analysts say, that you should give it an overweight position in your portfolio. So when you're investing in gold, give this stock a slightly higher position, higher valuation. And then, of course, the largest mining company in the world, maybe you know which one it is. It's called Newmont Corporation. Stock was trading at the beginning of this year around 40. At this moment, trading around 51.83. Target price 54, more or less. Company has a valuation of not less than 60 billion. Really a huge company. And the company is growing partially by, of course, being one of the largest, is by acquiring other ones. So, for instance, in 2019, they bought Goldcorp, and they were competing and are competing with Barrick to get this company, and eventually Newmont won this competition, and they are the largest company in the world. The nice thing about these companies is that you can also use options. So you can sell put options on it. You can buy put options on it to protect your position. You can sell call options. So where gold is an investment, where in general terms, you cannot make any dividends because it is what it is, or depending on what the price is doing. When you're using these companies, you have dividends. If there's a lot of need of gold, the price will be going up. Obviously, what they're getting out of the ground costs them the same amount of effort, but they can sell it for a higher price. So in the long term, these companies will also benefit from a higher gold price. If you need any specific help, or you have a vision or an idea about the gold price, please reach out to us. We also have courses in which we will explain exactly how you could use, for instance, options, how you could diversify your portfolio, how and where you should allocate gold in your investment portfolio. Let us help you. We are here for you, and we're more than happy to also be your coach in your investment journey.